Again, I appreciate Duke coming in and teaching again. We got so much from you last time. It's like we might as well run it back. And so, again, really excited to have Duke his presentation tonight. And so, really excited and kind of, I don't know, maybe for people who are just joining for the first time and weren't able to attend or watch the last session, maybe just to start off, tell us a little bit about yourself, my friend. How long you've been trading, why you got into trading, that kind of thing.
Yeah. So for me, I'm Duke, right? I'm a husband and father. I was going to say a wife.
Depends on what day.
I have a wife. I got into trading about 4 years ago, and I invested with a different company called Online Trading. It's more webinar style. I didn't really learn as much, and it was always after the fact. And then I found Apiary Fund or Trading on the Street, and then David basically trade the fund. So that just seeing the live trading was a huge help. I got into trading because I wanted to replace my job income and learn how to have a leveraged income, right? Because all you need is a bigger size account and you can do the same amount of work and earn more without more hours. Whereas, in a career, you basically have a glass ceiling. You either have to change careers or, change paths or something. There's a top as far as pay rates, So that's really kind of why I got into trading. And then right now for me, my goal is to, like I mentioned, replace my income, right? And why I chose the topic tonight is like this, the purpose of this is you teach on something so you learn. Because if you see it, you learn one rate, right? But if you do it, you learn faster. And if you teach it, you learn even faster. Because people basically quiz you on it or they kind of critique you on it. And then you get more feedback. And so you learn a lot faster that way. Right?
Sure. Yeah.
So for me, price action is one of my strengths just because I invested so much into it. But also there's a lot more that there's weaknesses on, right? And you want to hone your skills. So tonight I'm talking about continuations and reversals. Let me share a screen now. Because I'm mostly an aggressive trader. So I tend to want to continue the movement. And then I get in trouble because then the market reverses, right? Or I'm thinking, okay, I know the supply, like support and demand zones or resistance. So then I'm thinking market's going to reverse, and it continues. And again, I get in trouble, right? So that was one of my weaknesses. And so what's one of the best ways to hone your skills is to teach it. As I was researching about it, I got better at it. I started recognizing things better. And so that's why I'm teaching on this topic tonight. It's not that I'm an expert at it. It's more of, hey, I'm developing the skills and hopefully I'm showing you things that will improve your skills as well, because I spent hours trying to figure out what is, how to recognize those signs, right? Any questions or comments before I start, or?
Maybe just, you mentioned that you're an aggressive trader. Maybe, I don't know, expand a little bit or what's your definition of aggressive? Is it, you're trading max lot sizes or, that you have multiple trades? Maybe just to expand what you meant by that you feel like you're an aggressive trader.
Right. So David mentioned there's two types of traders, right? One is fear-based, meaning you don't want to lose anything. So you're afraid to put on the trades. Or if you do put on the trades, you're trading very small lot sizes, like, 0.01, and you're developing the skills. So you're like, yeah, I got a 30 pips runner, and you made 30 cents. you know. So an aggressive side is on the flip side where you're now greedy. So you don't want to wait. Like you want 30 pips, you want to be $300 or, $30. So you're putting on bigger lot sizes, which is bigger risk. And instead of, let's say, one trade, you're putting on multiple trades. You're maxing out. So you don't have to max out. It's just like, let's say you have 10 trades on, you put on 5 trades, whereas if you're trading at 0.01, you have 100 trades and you still only put on 5 trades. An aggressive trader in those 5 trades, it's the lot size. It's different. Lot size might be 0.1 or I've even put the 1 lot size trades on. Okay, like cool and
like cool.
You lose fast and you win fast.
Right.
So that's the flip side as an aggressive. And David talks about going to the median side where you're confident you can put on the trades, but not risk out, not max out like that, not going so heavy that you're in trouble. And if you do want to go more trades, heavier, knowing when to do it and also when to get out, right? So that's the flip side where being an aggressive trader is I'll win fast. It takes me sometimes 30 minutes, maybe an hour to get 1%, okay, on like a 5K account. Whereas others, as on the fear base, it might take them a whole day, 4 hours or so. Okay.
Makes sense.
Any other questions or comments? All right, so we'll get started with the presentation here. It's when. So pauses, David talks about these, that's when the market moves, it pauses, and then it continues. So one of the things you want to look for is the close of the candle is inside the bigger candle, right? So I'll have some illustrations to see, basically with the price action with wicks and everything. So let's say here's the current pattern. It's retouched the bottom here. So for me, as an aggressive trader, I would be putting on sells right here, which might not exactly be the best place because will it actually continue or will it reverse, right? So right here, you can see the next candle as it's starting. It's kind of small. What do you see next? Oh, whoa, it's actually pulling back a little bit. It closed pretty much inside this red candle, right? Can you see my mouse? So
Yep.
This is still an inside candle. It's more of a pause, right? Because what happens next? A lot of people might be putting on buys right here, but you might be early. And then what happens if it goes against you now, right? Which is exactly what happens. Okay. So if you're, let's say, riskier, more aggressive, you might put on some buys right here, but know that it probably goes against you like this. Why? Because this was just a pause. Okay, so for me as an aggressive trader, let's say I took the take profits thinking it might pull back and I see that it's paused, well, I'm going to be adding some trades and then taking this scalp right here. Does that make sense? Any questions so far? Or?
Yeah, Duke, you were saying that you would get into some sells on that first part, not like back to the left. So you'd be getting into sells right there. You wouldn't be waiting for a breakdown.
When I was very aggressive, yes. Ideally, you would get on the sells right here.
Right.
So let's say you get on the sells because this is the resistance zone, right? Well, when do you take profit? Do you take it right here, or do you got out early and you're like, I just missed it. I could have doubled my profits.
Mm-hmm.
Does that make sense?
Yes.
If you're favorable right here, you want to be watching it. And then if this is like an inside candle like this, hold. Does that make sense?
Yes.
But if you're, let's say, I took the profit right here, thinking it might pull back half, it didn't pull back. Well, if it drops, I just missed my opportunity, right? Whereas if I am more aggressive and I add back the layer, yes, it might, go up a little bit. I lose a few in the spread. But the point here is I can still get some extra profits.
And when you're putting on sells there, do you have like the other next largest chart up kind of identifying where it's kind of headed? Because it could just as easily bounce up off of that again as it could go down. So what else are you using to determine if you're putting on a sell, or is it just at this point experience and kind of, you know what I mean?
Yeah, exactly. So basically, you're right as far as looking at the higher time frame charts and making sure we're not like against support and things like that. But let's say this is the resistance zone and market has turned or whatever, right? It broke this level. Well, it retraced to that level, right?
I see. Okay.
So you're putting on sells, but you don't know if the market is just doing a fake out and it continues, right? So it's just watching at the 1 minute candle more closely to know where's your next opportunity. So if this is at a resistance zone, well, you probably want to hold because price is going to fall some more. Does that make sense?
Yes. Thank you.
And I also like how you said the candle is inside the last biggest or bigger candle, right? On that last slide right there.
This one, yeah.
Yep, because that or on the very right, the last clip, the candlestick where it actually breaks through that support level or action point. But we can see that green candle is very minimal, right? And you've got all these momentum candles that are really kind of, for me, just indicating that, hey, it's tested, but it did not close above that previous candlestick's high, right? And so that might be a good area for me where I've been thinking, okay, there's a potential that this is going to break through, maybe a good spot to add maybe some additional sell, right?
Yeah, exactly. So let's say you were selling at the top here. Well, you could potentially put a stop loss right here to protect your profits, right? That if it breaks this candle, then it's likely to stall, right? But if it doesn't break this candle, which you can see it doesn't, then you have more profits here. Continue. Right. Okay. The next one, you can see, well, let's say you had the sales up here. Where do you take your profits? Right here. Should I be getting out or should I hold?
I love that word.
Well, naturally, when you have a bigger candle, it's going to wick to 50% like this. So if you're on the aggressive side, when it went big candle like this, you're buying. Let's say this is enough for 2 pips, scalps. That's a high probability, especially to retouch this, right? So if you know that, well, what happens next? Oh, look at that. It continued the momentum. See? I didn't put any more drawings after this, but the point here is that if you saw this and then you got out, oh man, you lost out in profits because now it dropped again. And if you're selling right here, you probably, the next candle might pop up. So this is the wrong place to sell right here. Right?
Because you're at the end of a price cycle potentially.
Exactly.
Right?
You're potentially at an end of a price cycle. Okay. But is this the right place to buy? Well, probably not because huge momentum right here. It's not even stalling. It's not even pausing. Okay. So previously, let's say I would see this and I would be buying right here. Well, if I'm too greedy, right? Now I'm at break even. I can still get out, but most of the times I'm not getting out. So what happens next? Prices continue, and then it's like, oh, dang it, now I got to fix my buys. Whereas I was like, I was selling right here too, but I flipped too quick, too early. Does that make
on that last one, would you wait for a buy until you saw even like a flicker of a green candle, or are you just counting price cycles at that point? You mentioned about getting into buys down there.
So flicker is a good one. I didn't put that in, but I was thinking about that before this session. So
I'm just kind of wondering, like in the decision process, because you got two big red candles, eventually it's going to snap back, but would you wait for any kind of a green candle before you jumped into some buys, or are you just kind of, are you going off price cycles before you get into some buys on that? Or,
those are good questions. And previously what I would do is I would see this green, think, oh, market's going to turn right here, put on the buys, and what happens next? Just like
it's back down.
It's back down. So I'm early. I'm early in the opposite direction. Does that make sense? Okay, so we're getting ahead of ourselves here. When I talk about stalls, when the market will reverse, but the whole point of knowing when to pause or when it flickers is to hold on to your profits. Okay, so like right here, if I'm selling, okay, and this wicks up like this, well, you want to get out. Somewhere right here to recycle again right here. Does that make sense? But let's say now you put on the sales right here, it's going to retest the pivot. Sometimes it bounces again. So do you get out or do you hold? Right? So in this case, because this is a pause, and this is an example is a flicker. A flicker is where it will come in the opposite direction, but it doesn't break the candle. Okay, it's just flickering. Like, why does it flicker? Because market is trying to go in the opposite direction, and then the momentum continues. So it flickers. So a pause and a flicker is like the same thing. Does that make sense? But if this pulls back, what I'm going to talk about next, how to get out, right, and recycle. So I am using a different term just to make things a bit clearer. I'm going to call it a breather. Okay, when the market moves and then it pulls back, but it still continues. So this is a great example for recycling trades. Okay. David will still call these a stall, which then I was like, well, what's a stall? What's a pause? So I'm calling it a breather, okay, where it's like you made a run. It's like, I got to take a breath here, and then you continue running, right? So the pullback is no more than 50%. All right, so here's an example. This is like a consolidation zone, and then it drops, right? And a lot of times we're thinking, oh, high probability trade, put buys back to the area, right? But this is a strong momentum down. Okay, what do you see next? Okay, it closed. All right. Oh, look at that. The buys are coming in. This is where, as an aggressive trader, I used to start buying right here. I would be like, I'm going to get out. I'm going to start buying. Okay. Goes to the 50%. Oh yeah, market's turning. I want to buy, and I'm going to put it on some sales, or sorry, some buys to this level. That's as an aggressive trader, that's what I would have previously done. But if you look, this is breathing, right? It's just, hey, this was a big candle. So it naturally pulls back 50%. But does it mean that it's going to go all the way back? Not quite yet. Just look at that. It's coming back down. So if you're more aggressive, you could say, hey, here's my sell. Oh, I'm going to take my profit, pulls back 50%, add back on my sells. Does that make sense? But if you do that, it could go against you, because if you added a sell, it could come back right here, right? To this level. What was support and is now resistance. So this sell could be a losing trade, right? So if you're more conservative, you put on the sell right here, you're still holding, and then you probably get out right here. Does that make sense? What do you see next? Look at this, market's coming back again. All right, so previously I would put on buys right here. I would be aggressive. I'm like, oh, you know what? 2 candles right here. Market's gonna want to turn. I'm putting on my buys right here. And what happens next? Oh crap, it's going against me. Oh, let me add some more buys. What happens next? Oh, dang it, it's going back to the level. I should have put on my sells. Ah, dang it. And what happens next? Oh, yep, it's turning. And bam, dang it, I'm in trouble. Does that make sense?
Yes, absolutely. And it's one of the things where I really started to pay attention to that percentage of what that pullback is, right? If it closes above 50%, I'm probably less likely to get into a heavier sell, right? Exactly. Or if it pull back more than 50% of that previous candle or that engulfing candle, yep. Right? It's kind of been a good indication. But what would you say? That's kind of one of the things that you would look for, because this would be a perfect trade setup, right? Because as Dave always, for me, but as Dave always says, I'm excited, right, when the market goes against me, right? I make money when the market goes against me. Well, and I was talking to a trader today, and I told him that, and he said, "Are you crazy?" And then I kind of explained the reasoning, right, behind it. But just maybe the question to you is that, obviously that pullback of the 50% of the previous or engulfing or the bigger candle, is that kind of, I guess, a barometer that you would look for, or I guess an indication of, hey, you know what, if I'm in sells, maybe I can build some more levels, or it's going to continue?
That's a good question, and it's where the price is. If this is at a support zone, I'm okay as far as it going against me. But if I'm buying at the top, you're set for a runner against you, and you'll be in big trouble.
So, Duke, am I being too conservative if I'm waiting to buy until it goes above the top of that last big candle?
Right here?
I'm sorry, I'm having a hard time seeing your mouse. But like, for example, that last, not that one, but like the big red bar. Mm-hmm. That's right. For me, and I'm not saying I'm doing it right or wrong. I'm just saying that I'm really conservative and I haven't done that well so far. So I'm probably wrong, but I would wait to buy until it crossed the top of that body, because my thinking is that until it crosses that, it could still be on its way down.
Yeah.
But if I'm understanding correctly, you're saying maybe get into some buys before that even happens?
If you're more aggressive, then yes, you can get in some buys, right? Especially if it closes above 50%.
Okay.
But you can see here, this one, I'm like, oh man, it's going to close, right? It's early. Okay, yeah, this is like 5 seconds left, then fine. But if this is like 40 seconds left, well, at 30 seconds, you can see it's pulling back. At 10 seconds or something, it closed down here.
In my mindset, that just looks like more like a Fibonacci retracement. Like it's going to go back. It's going to go back a certain ways before it continues down.
Yeah, exactly. So it's just retracing. It's breathing, right? Pulling back before it continues. Okay, so if you're waiting for the green right here and you're buying here, what happens? Typically, price will drop again.
Okay.
So if you're waiting for this to close, that's fine. It's like, okay, now I'm looking for my opportunity to buy. And if prices are pausing, flickering kind of here, then yeah, you could add on a buy right here. But most likely it's going to pull back 0.5%, right? 50%. And then you buy right here. And it's more opportune. Does that make sense?
Yes, thank you.
Okay, why? Because when you have a big candle like this, typically it pulls back. That's the breather. Okay, but when you're having a run like this, it just broke. Well, look at this. This is full bodies. It's closing at the bottoms. This is not a high probability buy. Okay. You got to know when to do it. A high probability buy is when let's say it broke a major pivot right here, and this is the first break. Boom. Then, but if this is just prices are falling like this, it's more, this is the expansion and the runner to the next level. Okay.
And higher probability for the short side, right?
Exactly. It's higher probability to shorts because it's pulling back. You could recycle like this and the extra profits, it's only a little bit. But if you have lots of trades and stuff, and maybe you want to add some scalps, boom, 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 right here, this is a high probability scalp right here. All right. But that's aggressive. Why? Because this could actually go back. Okay. So now for the stalls, when is it going to reverse? Okay. So one of the biggest things is to look for those really, really big candles. The bigger the candle, the more likely it's going to pull back. Okay. So right here, this has dropped, right? What I mentioned earlier, this was actually on the first page. See, in the past, I would probably be buying right here. All right. And this is actually okay because why? If you look at the size, it's about the same. But you notice there's a wick on the bottom, buying pressure. Wick on the bottom as well. And this is actually turning green. It's closed as green. And then the next one is going back to the 50%. Okay. Will it close right there though? Because this actually is a higher probability scalp for the downside. So most likely it's going to retrace. And that's exactly what happens. But if you're putting on sells right here and you're like, oh, it's going to continue. Will it? Well, this wick tells you it's not. Okay? Because this is closing as an up green candle. If this was a red, then yes, it will probably continue. But this is the opposite direction. So yes, it retouches level, but guess what happens next? Boom. Okay, so if you're like, oh, this is my buy time, well, look at here, you just enter a layer. Here's an even better layer, maybe 1 pip or point something better. Does that make sense? So if you're entering heavy right here, well, you miss some profits right here. Okay, now will this go all the way back? We don't know yet because this is like the first wick, right? Oh, look at that. Prices retrace. See, so if you're putting on sells, you could put on sales right here. It goes against you a little bit, put on sales. And if you're taking profit right here, high probability scalps. But if you don't get out, what might happen next? Oh, look at that, break even. And this is where in the past I would hold. Like I'm selling, right? I already took my take profit right here. I'm like, okay, this is just recycle. And I would not recognize changing markets. Okay. But if you look, this is a very buying pressure right here. Okay. And this green, even though there's selling pressure at the top, if you look at the side of the wick, it's bigger. This is actually a buying pressure. candle. Okay. If it's at the top, it's selling pressure, but it's at the bottom here. This is at the bottom. So this is actually a buying pressure. Okay. And I remember watching Sean trade at one point, and I was like, wait, didn't he say wicks at the top means selling pressure? Why did he say this was buying pressure? But if you look, the wick was higher. Okay, so if you go back one, this wick was higher. So Sean would actually putting buy scalps right here. Because look at that, it just touched this. And then what do you see next? Boom, it blows past. Why? Because this closed full body. Since it's closing full body up like this is not the time to sell. Okay, if you're selling, it's you missed your chance to get out. Now you want to fix it and get out quick. Like let's say retraces right here. And that's exactly what happened. It retraces here. You want to get out right here. Previously, I'm like, oh, you know what? It's going to come back down again. It's going to break or whatever, holding the sells. Don't get out. What happens next? Oh, dang it. I missed my opportunity. It retraces again to the same level. What happens next? Oh, man, now I'm in trouble. Ah, dang it. I'm in too heavy, blah, 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 blah. It's like -5, whatever, -1%. But do you see, this is a stall. Why? Because it's showing turning pressure. Any questions?
No, I really like how you put it, and that's actually something that just learning from today is those talking about the wicks in the opposing direction, right? Because I would always look for buying direction or momentum or indications that for in this instance of buy pressure, just like you had said, right? Just that green wick, but not understanding that, hey, even though the market close or the candlestick closed on the short side, right, in that kind of middle that you're talking about, but that wick is green, and that wick is also larger than the previous candlestick's wick to the downside.
Yeah.
So I really like that. I really like how you put that, and this is something new that I picked up as well. So that's great.
Okay. So this right here, when it closed, especially right here, when it closed 100% of this drop, that's your sign that you should be holding. Okay. So previously I would, let's say this is a high probability buy, I would be buying. And so let's say it adds buy, it's fine, but I would take my profits right here, right at the support zone or the resistance zone now, right? And then I'll be like, man, I got out too early. I missed this. Okay, and many times I've seen it where here's the support, what once was support and is now resistance. It retraces deep like this before it comes back down. Okay, and a lot of times I would be getting out at these things. I'll be like, oh man, this is a major move, and then it plays out to my original analysis. But if you're trying to, like, let's say hunt and snipe the market, you want to be able to recognize these signals, okay, and then taking these high probability trades like this, okay, like putting on buys right here, aggressive too early. This one maybe early sign, okay. This one maybe not because selling, right? This is still a high probability sell right here. Oops. But if you're too greedy, what happens? You hold on to the sell, and then it goes against you. Okay, so it's knowing how to take the profits and when to take it, right? And so that's why doing this exercise has really helped me by just researching a subject that I was weak at and teaching on it. I'm like, man, I got better at it. And like today when I was trading, I caught more runners because I didn't get out early. Whereas in the past, I'd be like, man, I got out early. And I was just regretting it. Does that make sense? Now I know how to hold it for things like this. So all of this, if you look, was just a pause. Because look at this, it barely retraces. Previously, I would get out right here. And then I'd be like, oh man, it popped. And then I would buy, and then it would go against me. And then I would buy again. But the point here is like, if I took my profits, recycle, hold kind of thing, or just held it right here, what I basically learned is by holding this trade longer, I had more opportunities to do shotgun. So by holding this, now I could add scalps with 2 pips up to this level. All my 2 pips would now take profits, and I would still hold on to the 0 take profit down here. And I recognize that this is a pause, right? It's going up. Hey, this is not the breather because it's still just this level. If it breaks this 50%, then it would begin stalling. Okay. And I could put my stop loss right here. But the point is, when it's going up like this, I'm not adding buys. I'm not adding up here. When it pulls back right here, I'm adding if I want to be aggressive. And then it retraces to this level. I'm like, okay, I'm out. And then boom, it pops. I'm adding. It's still holding on to my 0 take profits. And so now this becomes a beautiful shotgun runner. Okay, if I only hold this trade right here, let's say I have 5 trades, well, not a lot. But if I'm adding all these, shotguns, I almost double my profits. And this move could be 0.5. It could easily be 1%. Right? All right, so more about stalls, right? And why do I focus on stalls a lot? Because again, my natural tendency is to continue the market, chase the market, keep adding. So I was getting in trouble with reversals. So making sure that I recognize those signals really helped me protect the profits. So here you can see it's retraced. This is where previously I would put on the buys at the wrong time. Because I'm like, oh man, this is a major candle. It's probably going to continue. Well, this was just the early wick. Major candle, right? Big candle retraces 50%. Okay, I would put on buys again, thinking it will continue. But this is a resistance zone. It just blew through this resistance zone, and then you got another one. So look at that. It retraced back down. Okay. So really, if you're seeing this, you must, David probably would say, man, this is a big candle. It's blown through one zone. He's probably doing some sell scalps.
Mm-hmm.
And so this right here is a high probability for some 2-pip scalps.
Wouldn't it kind of depend too on whether or not that was like, if that big candle was the cause from a major news event versus maybe just like a naturally occurring without a news? Like if it was a big news event, you'd want to kind of get that snap back. But if it just happened because it happened, would you have more faith in it continuing up?
Right. None of these are news so far. Okay. We'll cover news later because you don't want to be trading like that on the news, because typically news will shoot up, right? But the point is, this is a major candle. So it's going to retrace to the 50%, right? That's a high probability scalp. Does that make sense? And that's what you see right here. What do you see next though? It actually closed right at the 50%. And then the next candle is beginning to show red, right? So the point here is that if you scalp this, yes, you missed out on some profit right here. But if you're like David, you put on your sells, zero take profit, that is, see that this is not stalling, right? Not going to want to flip, and it's continuing. Basically, right here, it's going to flicker, which is a pause. And then he'll be like, oh, there's a high probability then to this level. But look at right here, it touched the level and it flickers. It didn't bounce, it flickered. So a lot of times in the past, I would be like taking my profits here, or I'm going to take my profits here, but I'm missing out. Okay. Oops. So this one actually I pasted in the wrong order. Sorry. So it basically went continuing like this, right? And then if you had taken your profits, you missed out on your runner. Does that make sense? So if you're putting on the sells right here as an aggressive trader, or thinking it's high probability, right? Then you could have had a great runner right here and good profits.
And it's testing that new support level, right? In these slides.
Well, this blew this, right? It blew past this support. And this is basically in a downtrend.
Mm-hmm.
So you would put on sells like this in a downtrend. Why? Because it's testing this. Maybe it's not like the down movement. This was only the half. Great place to be selling, especially because this is a huge candle. This is more like an exhaustion candle. And you'll see that. Whereas previously I would see things like this. I'm like, okay, it's a downtrend. It's far from support. Make sure it's far from support though. I'll see the exhaustion candle like this, and then I would be putting on buys right here. Or as it falls, I'm putting on buys, and then what happens? It drops. Oh, it's got to bounce. I'm putting on buys, and then I'm not getting out. I'm like, oh, you see, so now I'm really in trouble, and this becomes a runner market against me.
Dude, can I ask you a question?
Go ahead.
Dude, so on that support right there before it went down, I know David said that, if it tests that support resistance, I think 2 or 3 times, it has a higher likelihood and probability of running. What have you found? Like on this specific one, there's at least 5 tests there before it went down. Have you found that the more it tested, there's a higher probability of going through?
Yes, but more on the higher time frame. Okay, because I've looked at it before where, he's talking about, let's say if it's tested, the 3rd, 4th, 5th time, it's probably going through. And then I'm on the minutely, I'm like, 1 minute, it's like the 10th test and it's not going through.
I know.
So it's based on the time frame. So if on a 1 minute, it's testing 10 times and it's not going through, it's probably going to reverse.
Mm.
Okay, because it can't break the level. But if it's on, let's say, an hourly, and it's tested it 3 times, the 4th time, 5th time, it's more likely to break through, right? Does that make sense?
Okay.
So in this case, this is all 1 minute candles, because I'm trying to study, right? And share where to take your profits, where to hold, and where to enter. So if this is a downturn, right? Previously, I would be like, oh man, there's a major move. Market's going to turn right here. Put on my buys at the wrong times. Most of the time, it's still a continuation, right? And this is more of the exhaustion candle, the test. Boom, put on the sells. And then a lot of times I'm getting out early. This one's actually flipped, so sorry about that. Previously, I would see this and I'd be like, yeah, this is a great time to take profit. And then it becomes this and I'm like, dang it, now I got out early and I'm regretting it. Does that make sense?
Absolutely. You're kind of getting into that trading of prediction, right? Higher probability.
Right. But the point here is now recognizing what the market gives you. And knowing when to hold and when to get out. Because a lot of times we're holding when we should have gotten out.
Yeah.
Or me, I'm quick draw McGraw, right? I'm cutting those winter shorts because of those flickers, right?
Exactly. But flicker is a pause.
Mm-hmm.
Shows that there's momentum in that direction, that anything in the opposite direction is getting negated. So that's why when Sean was like, when it flickers, it's going to continue.
Good mindset change for me, for sure.
So now we're talking about news, right? So like this one, suddenly news, whoa, phew, man, right? Well, Sean would put on the opposite.
Mm-hmm. Kind of fade that news event, right?
Sometimes. Why? Because this is a fast candle. Okay, it's a fast candle. But if you're putting on buys, he's not holding on to the buys. He's scalping the buys. Okay, so it's continuing, right? And what do you see here? Wick. So here, this is a full body. This is a bad time to enter. Because if you're buying here, it's going against you. But the wick is coming right here. Look at that, 50% retracement, right? So if you're seeing the wick right here, great place to scalp. Okay, and this is where you want to use your like 2 pip take profits or 5 pips or something, because if you're doing 0 take profit, it'll go like this and you close it and then it slippage. Dang it, I just lost, even though it was good execution. Slippage and spread will work against you in that sense. Okay, but look at this, it's not retracing up more. 50% doesn't mean, oh, it's going to go all the way. You know, this is where in the past I would hold my buys and think it'll retrace all the way to here. No. The point though is here's my quick buy scalps and here's great selling re-entries or selling ads. If I'm selling up here, I'm holding, right? Boom, huge. This is 0 take profits and this is great shotgun. Does that make sense? But when should you sell? In the past, I would sell right here. Now I'm like, no. I'm going to be patient. Wait for this pullback to sell, you know. And especially right here, when it closed, that's when I would be selling and adding. Great, more confirmation. Because now it goes and retrace to this pivot. And this could be where you exit, because it might stall and flip back, or it can continue. Okay. And here's the real major news with the news. Okay. So right here, boom, big move. You can see this right here is a pause. This right here is turning into a stall because it's retracing this level, right? But is it a stall yet? Likely to continue. So not yet. It has not broken this level, right? It closed right at it though. And the next candle, this is where I would start selling in the past. Okay. And great hold right here. Okay. But I would be like, man, I'm scalping or whatever, right? But if it breaks this level, it's likely to retest the support right here. Why? Because there's nothing here. But see here, the candle was paused. So when in the past I see this pause, this flickering kind of thing, I would get out. And then the next thing is, then I'm put on sells right here again, but it's actually worse. Instead of recycle, right? So now I know what to hold on a pause, and it goes all the way here. But will it continue? If you look at this is a full body. So in the past, I would get out right here, whereas now I'm like, no, this is full body. It's pausing right here. Look at that. It's a major move. It's 100% reversal, and it's actually 200% retracement, right? 100%, 200%. Okay. And this kind of action happens with news. All right. So now with trends, when does it continue? So this is clearly an uptrend, right? This is consolidation. So how do you know when it's going to reverse? Well, if you look, the price cycles, if you just measure it, right, and the speed of it, this is up, down, pretty much a channel, right? It's very much matching. But this up cycle right here is more than the down cycle. So in the past, when I would see this break the trend line, I'd be like, I'm selling, right? No. This is, especially with this wick right here, this is a great buying opportunity. But then I would buy and take my profits right here and then regret this. Now I'm buying, holding, and seeing that this is just pausing. It's not bouncing, right? Boom, goes all the way. So you can see the up is still greater than the down, right? And then the down right here is only half. And then up again. So what is the likelihood? It's going to break up. Okay. It would be very hard for the market right here to go all the way here, because this would have to be a bigger down, right? Down cycle, and it has to break. So if it goes down like this, it's more likely to bounce. Does that make sense? And so that's what David would be saying. He'll be like, oh man, it's falling one price cycle, is not likely to break like that. Okay. Now, if this is touched right here, this could still break like this, because it's matching. So this is basically up and down is matching. It's continuation. Okay. But of course, you want to look at the higher time frame, that this is far from resistance. Does that make sense? If this is right here, right at resistance, the likelihood is more that it's going to turn down. But if resistance is far up here, then it's likely to continue. Does that make sense?
It does.
Any questions or?
You mentioned, you said something about the kind of caught my ear, a change of speed, right? A change of speed, and now maybe to clarify what you speed and then the momentum as the candle's forming, or maybe clarify a little.
Well, the speed of it, like how fast it falls or goes up, can then be a false signal. So the price cycle is a better, okay? But if you look here, it goes up, down, pretty much the same pace. Same price cycle, same time cycle. This one goes up faster, slower to go down. So what does it mean? The up movement is stronger than the down, right? But it's in consolidation. So right here, it's going up fast, slow down. But right here, it slows. Okay, so if you're like, oh man, this is fast, this is slow, it's likely to turn. No, because look, this is still slowed down as well. Same time cycle, same price cycle, same time cycle. Okay, so I'll talk about the speed next and how to recognize when it wants to turn. Because right here, you can see here it's slow up, fast down. And if you're looking at this thinking, oh, it's fast down, it wants to turn. No, because it's the same price cycle. Okay. And right here, it's still slow up compared to this one, fast down, right? But it's a continuation. So price cycle is a better tell than time cycle. Okay. Now with market reversals, okay, what you'll see, like this is going down, you can see that the up price cycle is less than the down cycle. Down is more, right? It's almost twice as much. So it goes up 50%, down 2, right? Twice that much, up 1, 50%, down 2. And this is where it begins to change, because it goes up 1 price cycle, that's expected, but it doesn't go down 2, it goes down 1. Okay, and then it goes up almost 1 as well. So this is where in the past I'd be like, oh, okay, it's changing, let me buy. Again, I'm early. If I'm selling, I want to be cautious that it wants to turn right here. Does it make sense? But it goes down basically 2 price cycles, right? Just to match the previous pattern, and goes up 1 price cycle. So this is where in the past I'd be like, oh, it's going to continue. Let me sell, right? But again, if I'm timing the markets correctly, I know, okay, this is now in the down. This is now 2 price cycles is likely to turn right here. I'm buying and I'm holding right here, because this right here was a holding pattern, not a stall to reverse. And if it holds, I know then, hey, it's breaking the 1. It's likely to right here. And you can see right when it hits this resistance level, it does pull back. It was a breather, okay, but didn't turn. It continued up to this pivot. So when you're seeing matching up and down, this is when it changed. The market structure has changed right here. Does that make sense? And then when it goes down right here, it did not go down all the way. It has broken that. You see, it is basically only 1 cycle. So this is when it's likely to run up. But on the first attempt, on a big move like this, 1 price cycle, it's not likely to continue. Retest. See, it's retesting the bottom right here before it really does that. But this is now the uptrend. Okay, so I noticed this when I was trading USD yen as prices were falling. I would notice this kind of pattern, and I think the market's turning. And I had plan B, which is it's likely to fall more. It's just that I didn't execute on the plan B. So I was buying, thinking it's going to turn, but it was an unconfirmed turn. And then what happens, prices go against me, and then I disable my accounts. So I went -10, disabled my 5 to 50 account because I was too early on the buys. But if I had just recognized it and be aware and then put on the plan Bs that it could continue, I would have been +10. Instead I was -10, right? So when the reversals, you got to be careful. Continuation is easier. Okay. Any questions so far?
Just that, I think it's fantastic that you mentioned the plan B, right? And I think it's very important for traders to always have that mindset, right? The what if, right? And I think that's where a lot of us traders fail, is because we don't have that plan B, right? Don't have that contingency plan of what if. And so, no, it's just fantastic that you mentioned that, the plan B. And so let me ask you, I guess, what do you think, or how do you feel that other traders or us traders that are all here, what can we do, or maybe some tactics to help implement some of these, some of this training in our trading?
Well, it's just studying the charts and seeing, where did it reverse? Can I recognize the signs? Would I have thought to continue right here, or recognize that it's reversing and start buying? And like right here, if I'm buying, well, look at that. It did like a head and shoulders basically right here. Right. So here it's buying. And then when it's reversing here, I would be negative because I would fade right here, and I would buying. And it goes like this. And I'm like, oh yeah, it's going to retrace here, hold. When boom. And then this right here becomes, your -5%. Mm-hmm. Right? Because you're perfect as far as execution and recognizing it's wanting to turn. It's just that you didn't time all the right turns, all the pulses, right? Because this was up, this was down, this was up, but this is now down. And so if you're doing 1 price cycle, boom, up, hey, flip. Because right here, you can see it, basically this shows a weakness that This was full body, right? And then a very weak candle. One price cycle. You don't want to be buying down here. And then if you're pulling back here, it doesn't mean that the market's going to turn right here. A lot of times the market will retest, especially with turns. It's going to want to retest. So if I'm knowing this is buys, I need to be aware, plan B, that it might retest this pivot before it really turns. So this is the early turn, and this is the confirmation right here. Does that make sense? This is the confirmation. And this is when you want to really be loading big on buys for the runner, but not here. So I got in trouble because I'm early and I would be loading up on buys like this. And then as this was going down, instead of plan B and selling, I'm fading. And so this is still my plan A. And now this is plan A, fix it, plan A fixes, and then now disabled accounts, max loss. Does that make sense?
Right. And Lee just mentioned not only too early, but also maybe a little bit too heavy, right? In our position sizes.
Yeah.
And
if you trade like Kevin, and let's say you start buying right here and you have 2 layers and then you have 3, no problem.
Mm-hmm.
Once this market turns up, boom, this is a profitable trade. Maybe 1%, 2% drawdown right here. Okay, as a swing trader. Okay, but if you're heavy and you got like 10 trades here and then you got like 30 trades here, well, what I have experienced the pain of is Alvio would disable my account before I can experience the turn. So right here, I'm experiencing not enough margin or negative 5% disabled. And then it turns and I'm like, no, I've only had just not added so many trades.
So really just, having that, part of that plan B, right? Or maybe plan A/B is, hey, I'm going to make sure that I understand my ratio, right? I'm going to make sure that I adhere to, saving half of my positions, right? For to get outside of those upside down trades, right? And so, but you got to experience that pain, I believe, for it to really set in.
Right. And that's why I study more on reversals, because now I realize a lot of times I'm early. I recognize the early signs, but I don't realize that it wants to continue and retest, which is right here. And this is usually where I get in trouble in the past. Now, because I'm aware of it, I'm not going to, Okay, so now this is where price cycle and time cycle makes a difference. Okay, because this is an uptrend, big one. Okay, you can see the price cycle matches as far as a consolidation zone, but the time cycle is now telling something. Okay, because here the up was fast, down was slow, and suddenly the up was slow and the down was fast. Okay, in the past I was like, the up is slow, is likely to continue, but that's not the case. It usually does not pop right here like that, because I was like, hey, this is a stair step, it's likely to pop. Well, you also have to watch the higher time frame, because this might be your resistance zone. So this is what happened, I think, with Euro USD at one point. I was thinking, oh man, it's going to pop. But it was at a daily resistance level. And the next thing was a fast down. And I was like, okay, well, it's going to go up again. No, because this is like the momentum right here. It's like building up, and boom. Okay. So if you're like right here selling, you see hit support, and this is basically the stop. Why? Because the bigger the candle, it typically goes, 50%. Okay, so this right here was a big candle. If you know that, then hey, take your profits. And then these could be buy scalps to 50%, and then now it's selling. right? And then these are your re-entries. You have worked both sides of the market and then increased profits. Okay. That's if you're more an aggressive trader. If you're more conservative, then you could basically hold right here and know that, hey, if it doesn't break 50%, if it goes to full body right here, then that's your stop loss and you have protected profits. But if you're like, oh, I'm going to put my stop loss right here, at the pivot, well, guess what? You just stopped out of your trade before you could, reach your target. Okay. So a lot of times, as far as swing traders, you're like, oh man, I'm profiting. Let me protect my profit. And you actually mess up your ratio, because if you're taking a 1 to 2, like risk 1 for 2 rewards, you just took a 1 to 1 because of where you put your stop. You moved it too early. Does that make sense? So if once this retraces to here and it closes, then yes, you can put your stop loss right here. But while you're going down like this, momentum wise, big candle means usually 50% retracement. Right. And so if you want to, you could put on the sells right here, hold, add sells right here. And a lot of times, as far as the fear base, you don't want to add the sells right here. You're like, oh man, it's going to retrace. It might, again, most people
test those highs, right? Mm-hmm.
Yeah. You don't want to add to your trades, but this is great areas to add to your trades for bigger profits. Does that make sense? Okay. And so typically, if you watch though, it always consolidates. Okay, but here the consolidation is in a down channel. All right. Whereas then you have the big pops for the turn, right? And if you think about it, this is kind of like a big consolidation right here too. Mm-hmm. It's just big. Whereas this is a consolidation. And if you're right at a resistance area, that's why it turns down. Okay, in the past, I'd be like, oh, it's at the resistance area, it's going to continue. No, it's going to turn. Okay, if this is in the middle, like resistance up here, then likely, again, price cycle is up is the same, right? More likely to continue. So what's the difference here? Resistance zone. This is against the resistance zone right here. That's why it pops down. Because if you go back a few slides, it's consolidating here, but continues up because your resistance is far up here somewhere. Does that make sense? Just giving you a context so that you don't confuse things. Because a lot of times we see this pattern, it's like, oh, it's going to continue. Well, you have to put in the high time frame. Okay. So more on reversals here. And this is where price cycle and also time cycle shows you the pattern. Okay, because you have a fast up, slower up, okay, but twice the price cycle, and then even slower up, only one price cycle. So this is a head and shoulders pattern right here. You guys see it? This is slow down, faster down, and just as fast. You see the down is just as fast. I would not be buying. You can see it did scout, because here's the support level. But the point is, I would be looking for sells, and boom, right here.
So maybe the confirmation, right, of the closing above that.
Especially right here.
Consolidation, yeah.
Could not break this level, and it stalled right here. That's when I would be selling. Boom. Okay.
Nice.
But that's all I had as far as market continuations and reversals. Hopefully you guys got some value out of it and start seeing more of the pattern and being aware of when the market's wanting to change directions. So that way you don't load in one direction and it goes against you.
No, just fantastic stuff. And again, really appreciate it. So maybe I know we're running just a tad over, but want to open up as any specific anybody has a question or comments. How great Duke's hair looks today. I don't know, just anything that's down you guys' mind. See, Lee said he likes the analysis of the speed analysis. Definitely very good. Let's see. Oh, Joe. Yeah. So we'll be posting the recording, of course, and I also will be posting some more of the sign-up sheets as well. Again, we'd love to have fresh faces and everybody have an opportunity to really teach. And so
the thing I'm afraid of, I'm going to teach what I do, and it's so completely wrong. People are going to be like, dude, you shouldn't do that. It's terrible. God, you're awful. And the rejection will just be hard for me to.
I'll send you my my presentation, and that'll give you the confidence. Again, it's not really about being wrong, right? Or right. It's just about expanding upon what we'd like to learn, right? And so, just like Duke said, we start to do research on this particular topic. We start learning, and then obviously we start teaching it. So, nobody should, I don't think, don't hesitate, right? You get me in front of a camera, or in a Zoom meeting, I pretty much almost freeze a lot of the time. And so,
well, you guys are doing a great job, and the community here is fantastic, and I just thank you for that resource.
So Sky, are you going to deny us the opportunity to throw tomatoes?
To throw tomatoes? Is that virtually? I don't know. Does it have a splat effect on the screen?
Yeah.
I think you know what. I don't think you'll do a bad job. I'd just do it, Sky.
Okay, everybody. This is called a time frame. They come in 1 and 5 and 15 and an hour. And then you've got the wicks here. Now we're not talking about John Wick. Put the guns away. We're just talking about wicks for up and down with the price.
in that voice the whole time too.
Exactly. Happy to.
No, but again, everybody's fantastic. Really appreciate it. And just thank you so much, Duke. Really appreciate you stepping up. And I learned so much when you present. So, and then of course, go to the YouTube channel. Spread it to your friends and your neighbors. Let's keep this community growing and get to make 2023 a fantastic year.